Hey traders, welcome to another crypto market and global macro update. We're mainly going to be looking at cryptocurrencies today. But first off, we always want to be looking at the US dollar. We normally don't start with it, but it is at a pretty pivotal point where we've broken below the ascending support zone holding the higher lows. We see something similar to the last time that we saw an ascending wedge breakdown. So let's just take a look at what happened last time. Let's actually draw because that would be probably a better way to explain myself. So let's get our snip and let's explain what happened in the previous consolidation. We found a base, we saw a series of higher highs and higher lows. Once we broke it, we lost confidence, and once we failed to hold the double bottom, we then made our strong impulsive move to the downside. So this is the downtrend. This is our impulsive move, similar to what we had right here. And then what we see after this point is a nice rounding bottom where we see a series of lower highs, and then series of higher lows, right? Or lower lows and then higher lows. Same thing. We see a series of lower lows, higher lows, higher lows, higher lows. And now we got ourselves a nice ascending zone. And then we got our series of higher highs, and that's how we form the continuation pattern for the ascending wedge. Now what we're seeing right now is a failure to hold the series of higher lows. We see a potential, well, already a lower low than what we saw last time, which was right here. This was the previous low right here, and now we've broken below that area. So in my opinion, yes, we could consolidate, but now this ascending wedge is already confirmed for a breakout. And then we're going to be moving towards the double bottom phase, which is the first bottom right here, the consolidation, the nice tight squeeze. You get our fake. The US dollar bulls are probably charging in at this point. They get faked out, lots of confidence lost for the bulls of the US dollar, and then you get the slow descent down. So what we're seeing right now is just the entry to the double bottom phase, where you see a breakdown right here. This is a little bit tricky to maneuver because there could be some whipsaw action, some volatility within this zone, because you get the buyers holding this level of support with the 88 level being a major zone. So there's going to be quite a bit of buy volume and support at this level. So when we are inevitably going to the testing of the support there for the double bottom, there might be some buy pressure picking it back up to then retest this ascending level right here, or a major level of significance. So we've got to be a little bit cautious, and we know that the assets that we're looking to long, cryptocurrencies, are going to be negatively correlated with the US dollar. So if we get some buy pressure from this supply zone this demand zone at 88, and we get some whipsaw action moving the price back to the upside, BTC, Ethereum, and all your other alts are probably be going to the downside, or at least most of them. But definitely got to keep that in mind. But at the end of the day, our overall momentum is going to the downside. So we're going to be looking to see the price slowly trend, test the double bottom. So this is going to be the double bottom potential. And then once we break this level of support, I think that's when we're going to have our next impulsive push to the downside for the US dollar. And then our alts, BTC, will be flying, in my opinion. So that's what we're going to be looking out for. And then let's dive into the smaller price action to see what we can extrapolate looking at a smaller time frame. But overall, that's what we're looking for. We already saw a break to the downside. We could see, like I said, some volatility, definitely some whipsaw action that could occur on the US dollar, which would obviously impact other assets that we're trading. So keep in mind, there could be some volatility. I'm going to be looking at that 91 zone for the major level of supply right there. So even if it does pull back quite aggressively, I don't mind, because at the end of the day, we are looking at this as a bearish impulsive push to be coming soon. So we've already completed the first pattern, which is the ascending wedge. We're going to be making our way down to around 89, 88. That's going to be the double bottom. We're going to have a potential failure, maybe even a squeeze to the downside here. And once we start that initial impulsive push below the 88 zone, that is where we're going to see alts, BTC fly, and we're going to be looking for leveraged longs during that period. But like I said, could be a little bit of chop before we get into that phase. So that's what I currently see on the DXY. And then looking on the weekly chart, why is the 88, 89 level so important? We see this major, huge double top here, where the next potential significant zone is all the way at like 79.80. Massive potential move to the downside. And we saw during this phase, very, very strong negative correlations between BTC and other cryptocurrencies with the US dollar, which is DXY. So we want to see the US dollar weaken, which makes sense because the overall stimulus should be continuing, and we should just continue to see the low interest rates proceed. So in my opinion, from a fundamental level, it makes sense. We're seeing a weakening of the dollar. People are looking at safe haven assets. People are looking at sound money, BTC, gold, silver, except in my opinion right now, cryptocurrencies is taking really a lot of the capital that is being allocated into safe haven assets and sound money assets because of the disruptive nature of a new technology really. So we're now going to get into some cryptocurrencies. Just wanted to discuss the US dollar before diving deep, but that's going to be my current opinion on what's going down for the US dollar. Lots of confidence lost. I think there will be a little bit of a fight to get below 88, but I think once it does, we're going to see a strong push. We've seen the US dollar have extremely volatile times before. Look at this sell-off here from March of 2017 to August of 2017. Huge move to the downside, and in my opinion, we could see it just continue and fall all the way to like the 80s, 79. Major level of support here for the next one, looking at the geometry of the double top. So without further ado, let's now go on to BTC, and then we're going to be looking at the BTC dominance, because that's going to be a very important chart to keep an eye on. Let's just keep this at a nice time frame. I also have the nice US dollar right there. So let's continue on with BTC as the next chart that we're going to look at. Let's start off all the way from the weekly. We've already established that this 30K zone, major level of demand, and we saw a nice squeeze. It was, in my opinion, a descending triangle that held that 30K zone. We had that strong impulsive push to the upside, validate that there are bulls in the market and there is a shift in confidence. And now we currently see that confidence follow through with it holding the higher low, and then we see our next impulsive push break that previous high of around 40K. And currently we're just brushing under 50K right now. So in my opinion, we're definitely going to be hitting it. That's going to be the next target, and after that point we could see a little bit of a sell-off just because 50K is such a psychological zone. It's a very whole number. In my opinion, it's probably the most important number from, let's say, 10K to 100K. It's kind of the medium. 40K, 60K is not as much of a round number. 50K is like that big halfway to 100. So major level psychologically as well as technically speaking. So let's just look at the previous run that occurred and discuss kind of one of the reasons why we thought this 30K zone was such a major level of support. So we see this high low from the all-time high to the low of the bear market. We draw a Fibonacci here, and we see that the extension of the 618 is going to be a major level of sensitivity. And we can see right here, impulsive push to the upside. We see candle closures right at that level around 1785, 1800. And then we see a overextension of the impulsive push. And then we see the pullback to validate this zone as a major zone of significance at around 1800. Same thing that happened here. We saw that impulsive push overextended beyond the 618 zone, and then we pulled back and held this zone as a major zone of demand yet again. And then we are now seeing our impulsive push to the upside, where buyers are now taking confidence yet again. So then what I'm expecting, in my opinion, is an overall push to the upside. But like I said, that 50K zone, which we'll get into in the smaller time frame, is a major level. And then we see this is the squeeze that occurred right above that 30K zone. The geometry and the size of the opening of the symmetrical triangle is going to be the potential target for this price action pattern, and that's going to line you up perfectly at that 50K zone, as well as it being a psychological level. We could see a little bit of hesitation there for BTC. Now, this is what I was talking about with the US dollar. If the US dollar is going to hesitate above 88, we could see a little bit of a consolidation here for BTC, which wouldn't be a bad thing. So this is just what I got from the previous bull run. We saw a nice push right here. While the US dollar is just whipsawing back and forth, really hesitating to break above that major level of support, we could see some hesitation to break above $50,000 for one BTC. And while that is the case, we could see a nice continuation pattern form right here. But like I said, this 30K zone is going to be a major zone to keep an eye out on. And if it falls down close to that level, in my opinion, buy the fucking dip. We're in a bull run. That zone is a major level of demand. You know institutions are going to be buying it. And that's just my opinion. Don't follow it if you don't agree, but that's what I will be doing definitely if it does consolidate here for a little while the US dollar is just trying to break break below that major 88 zone. So just to keep an eye out on that. That's going to be, in my opinion, we got to have some consolidation. We've been basically going straight up, broke brand new highs. If it does consolidate and then not have that dip, that could very well be the case. What usually happens is a nice ascending zone right here, and then we see the dip, and then once it breaks below this zone like here, then it starts to rip. And then once you break that all-time high after that failure where bears try to gain control and then bulls say, nope, we're definitely not going to have that happen. We're going to maintain control. We're going to have conviction that the price is going to continue to the upside. And then once you see it rip back up above the zone of confluence here, you're going to be looking for opportunities. Once it breaks that all-time high, then we could see another impulsive push to the upside. So that's just one of the opportunities that we could be looking for here. But in my opinion, looking at the two different assets using our multi-asset analysis, looking at the US dollar, looking at other assets in the market, we could see something like this occur. But while the US dollar is falling, doesn't mean that alts could not be falling. Bitcoin's obviously more correlated with the US dollar because it's basically the store of value asset in the cryptocurrency market. And then other ones have actual more use cases with disruptive technologies like Ethereum. But BTC is in my opinion, the one asset that is going to be perceived as sound money in the cryptocurrency space. It's basically established itself and cemented itself as the store of value asset in the cryptocurrency space. It's pretty hard to attain that status otherwise. So that's going to be my view on BTC. If it does break above 50K, we'll have to recalibrate. But at this point, because we're looking at the cryptocurrency market cap dominance for BTC, in my opinion, we could be seeing another push from the alts here. It's going to get a little bit of water, and then we'll be continuing on here. So, we've been talking about this on our Discord, so if you have not been reading, or if you're just not in it, definitely suggest you to check it out. There's definitely some really good information, lots of talk and discussion going on about not just cryptocurrencies, but overall market information, analysis, discussion, interest, a lot of quality conversation. So going on to what we're seeing right now for the BTC.D chart. This is the BTC dominance. So right now, BTC is around 62% of the entire cryptocurrency market cap. That's what this chart is currently showing. And we saw last time in 2017, when we had that last major bull market, altcoins really took charge in terms of market cap domination. We see back before 2017, BTC had like in the 90s, pretty unbelievable. And then during the 2017 bull run phase, we saw altcoins absolutely boom, overtaking BTC in market cap, not in terms of size, but in terms of appreciation. And that's why when you're speculating, smaller cap coins are more speculative, more risky, but have a higher ROI if they do turn out to be a successful trade, because they have much more room to grow, obviously, in short. So when you're having bull markets, altcoin markets are booming, so Bitcoin is going to lose its dominance, as we see right here. And then when we had our bear market, when we had BTC go all the way to 3,200, a lot of altcoins lost like 80% of their value, more than that, 90% of their value from the all-time highs. And it's a really bad situation for many alts. So then a lot of people funnel their capital back into BTC because it's going to hold its value a lot better than most alts. Some alts did overperform. But now, in my opinion, we are now at the phase where we are entering back into the altcoin market bull run, basically alt season. And what we're seeing right now is a nice area of confluence. Let's just talk about this a little bit in greater detail here. So we had our squeeze where we see 1, 2, 3, 4 major level of resistance right here, and then we see our nice ascending zone right here, support, resistance, support, creating a nice squeeze within the price action. So we did see a slight push to the upside here from the BTC dominance above this descending zone. So in my opinion, during that time, there could have been a lot of BTC bulls, strictly just Bitcoin, saying altcoins are dead, BTC is going to take over, sound money, all that stuff. But in my opinion, there's always going to be speculators looking at BTC and thinking, okay, well, if that's doing well, let's buy a cheaper, smaller cap alt that is a little bit more speculative, but will provide a much greater return on my investment. In my opinion, that's always going to be the case. So we are going to be looking at altcoins. We saw a fake out right here where we broke above this zone, but we came right back into this triangle, and now we're trading within this triangle, and the price action looks very, very bearish. Lots of wicks to the upside, and we do see a nice potential head and shoulders right here, and we see lots of wicks on this right shoulder. So once we break above this level of support, in I guess 62 zone, especially when we break above below this zone here, which we'll look at on a smaller time frame, then in my opinion, that's the confirmation that we've broken above the series of higher lows, and we've broken out of this triangle. So we're going to be looking for a huge run in the alts once it breaks below this zone here. Once it does that, basically all supports not are completely lost, but we're going to be seeing a huge shift, in my opinion, from alts just slowly trending and some alts exploding to many alts exploding and some alts just trending. If anyone was in 2017 bull market, you remember the insanity of the alts, and that could happen again here. And we're going to be looking for this head and shoulders to initially break. We don't want it going above, let's say, 68.50. We want it sticking within this range right here. Let's just zoom right in, because I know some people are looking in on phones, and then we can talk about the price action on this 1 week chart as well. Obviously, we're not trading this, so we're not going to look at too small of a time frame. Not absolutely perfect, but this is the head and shoulders I'm talking about right here. So we could see a slight move back up to create that right shoulder, which would sort of make sense because the US dollar, like I said, could see some hesitation to go below this zone. This is the US dollar, so we're right here. So we are needing to break below this level of support, and we could see some whipsaw action here. During the whipsaw action, alts are generally going to bleed a little bit more than BTC. So BTC dominance could be moving up a little bit more while we are seeing the hesitation here from the US dollar. But once we inevitably see the US dollar drop below the 88 zone, which is this one right here, then we'll see BTC dominance plummet below this zone, and then maybe start to really trend down once it finally breaks 58, which is right around here, 58 to 60. Major level. So that, in my opinion, is the correlated moves that we could see. And it does make sense looking at BTC, looking at BTC dominance, and looking at the US dollar. All looking at it as an interconnected mechanism, just all playing together, basically. It's a one single pot of capital that is being inputted and outputted in different assets, depending on the market sentiment and the feelings of people, institutions, human beings. So that's going to be BTC.D. We're now going to get into the other chart. Let's take a look. Let's keep these all open. And then let's actually look at this guy right here. Also, just a side note, if you haven't checked it out already, we do have this really cool volume indicator, Performante's average Bitcoin volume indicator, which averages out all major retail cryptocurrency exchanges and places it onto one single data set. Instead of having all these different exchanges, you don't know which one you're looking at for volume. Maybe you're just looking at the Binance one. Well, you're missing out on all these other different exchanges that have different volumes. So this is a really good average to give you a better understanding of the volume in the overall cryptocurrency market, instead of just one exchange. So let's zoom out on this one. Now we're going to be looking at some altcoins. Let's first look at Ethereum. If it opens, awesome. So we're going to talk about this ascending wedge that did break to the upside. Now, this isn't perfectly ideal with the US dollar and the BTC, but this, in my opinion, looks really bullish because let's stick down to the weekly chart. We broke this all-time high of around 1400, and now we're squeezing up, and we just broke this major level of resistance. We see lots of hesitation, and then we just saw our first impulsive push, and then now we are squeezing up from this ascending wedge formation, which is a squeeze, and then we're seeing a consolidation and a contraction of the volume. So we're seeing overall buy pressure continuing to come in, but the bulls are, in my opinion, like basically winding up for the next impulsive push to the upside. And this does correlate with the BTC.D chart, but we're going to talk about what could occur here with this little slight hesitation and then that next move up. So first off, this ascending wedge, what are we looking at? We are looking at a potential squeeze up or a melt up, where instead of a descending wedge where you get impulsive push, and then you get your hesitation, you get your second lower high, and you get your third lower high, and you're looking for that first impulsive push right here, and then that pullback phase for the first validation of the previous resistance, new level of support, and then you're going to get your next impulsive phase which you are trying to ride out. That's the ideal situation for a pullback and a contraction. But what we see right here is the bulls are so antsy to get in. We actually see a potential melt up phase. So we see our strong impulsive push right here, strong impulsive push, and then we see a low, and then we see a slightly higher low, and then we see a pullback, and then we see a slightly higher low, and then we see a pullback, and then we see a break above the ascending trend line connecting the higher highs. Not higher lows, higher highs. And then we see a series of higher lows as well, squeezing the price up. So this is a contraction going upwards. Now usually in a bearish trend, this would be ideally a bearish continuation set up to the downside. But in a bullish market, we could see a melt up. And then we're going to be looking for that third high to test as a previous resistance as a new level of support. We're looking for a continuation pattern here, and then a continuational push to the upside, ideally. And what we're seeing right now is just that, but I do want to show you a previous BTC chart, which is a little bit different because it's not going to be an instant continuation. It's going to be a slight move to the upside after a drawn out consolidation, which we'll talk about a little bit later on, which does make sense when we're looking at the US dollar and the BTC. But overall, we're seeing nice strong push to the upside. So we're going to be looking at this major zone around 1600 for that strong level of support, because that's where that breakout zone is. And look at a previous price action structure that showed similar types of character to this one right here. So looking at this a little bit more, let's take a picture. We saw lots of support, and then a squeeze. We saw a nice move to the upside after the squeeze completed right here. Not super great because we saw a initial push. We made a higher high, initially got smacked down. And yes, we are holding market structure well. Previous level of resistance is a new level of support right here. But like I said, the US dollar is in a position where we could see some hesitation to really make a strong move from the alt side, just because the US dollar usually is going significantly to the downside or aggressively pushing down when alts are really flying. So looking at this, what we could see is a slight dip down. We could be going and seeing a nice level of lower highs, but we're looking for this major $1,600 level of support to hold, and then we could see a descending zone and then a nice continuational push to the upside, which is a great overall structure to look for when we are looking at potential moves. So let's take a look at the BTC chart a little while back. I think it was on this one actually. And it was awesome. All right, so this is a little bit long and drawn out, but we see a nice ascending wedge formation that did form on BTC right here. And then this was the series of higher lower highs. And then we saw the nice push to the upside, but it kind of got stuffed. And then we held above the breakout zone of the ascending wedge. And then we saw a consolidation, not ideal. But then when you're looking at the larger time frames, we were able to get that triangle, and that this is basically where we entered after this squeeze right here. Boom, boom. And then you get the nice breakout zone right here. We were talking about around 11K that BTC is about to commence its bull run. So hopefully you're able to capitalize on that. But this is kind of the structure that we're looking for, really, is a nice squeeze up. We're going to get a little bit of a bullish push to the upside. So I think there could be a little bit more sauce left to squeeze, I guess you could say. But looking at the US dollar, I think we could see a nice slight consolidation where we're not going to get a ton of appreciation for the next little bit, but that's going to set us up for that next strong impulsive push to the upside when the US dollar does move to the downside. So that's going to be the look on Ethereum and kind of a good comparison to example here at BTC. Not exact. I don't think it's going to be that long, but let's just move this. But I think we could see some consolidation here, so that's just something to keep in mind. But it doesn't mean all alts are going to be moving to the downside or consolidating, but Ethereum is very correlated to BTC, whereas some of the alts are a lot less correlated to BTC, generally speaking. So that's going to be the overall cryptocurrency market. We are going to end off with the S&P 500 here, just because we did say it was a global macro update. We already looked at the US dollar, but S&P is a really good indicator for risk on assets. Just going to be taking a quick look at link. All right, let's look at the US dollar, and then our S&P 500, we'll look at the US dollar. Looking at the weekly here, massive move. Let's just take everything off. So a lot of people were talking about this expanding pattern right here, saying it's extremely bearish. You don't want to see expansions, you want to see contractions. And then a lot of people were saying that we could see a move from the top here, and a lot of people were calling for shorts for that move there. And we were seeing a lot of hesitation like here. As we can see, we were consolidating. A lot of shorts during this phase right here. A lot of people were thinking that this was the top, and then they were going to be looking for a sell-off after that point to the downside, maybe to this mid-level or even further down. But that definitely did not happen. I really like looking at the US dollar and negatively correlated assets and looking at the two different price action patterns and structures and really comparing them. In my opinion, this does look pretty damn bullish, which is kind of unbelievable to say, but we got to look at this not just from the technical aspect, but also the fundamental aspect, where the US dollar is plummeting. It makes sense, in my opinion at least, where the US dollar is weakening. We're at a later point down the line, may get a point where the consumer price index numbers starting to spike, the government is feeling the pressure from the people due to inflation of everyday goods and services, not just in assets where the rich get richer, but poor people really start to feel it when their food prices go up, when their insurance, when overall everyday goods and services start to go up, then people start to really revolt. So at this point, we're just seeing the asset prices move up exponentially. And we're at a phase in the market, in my opinion, where risk on assets and speculation is the norm. Not a lot of people are conserving in the markets, looking at Wall Street bets, looking at the news stories, looking at Dogecoin, looking at Tesla. These massive pumps are creating a lot of money, but creating a lot of hype for people to want to get into the market, right? Even like things like gold and silver have been doing excessively well, looking at the miners. Cryptocurrencies are doing well. There's a lot of sectors, even the marijuana cannabis sector has been picking up quite a bit. There's a lot of markets that have been really outperforming the years prior because of all the speculation, all the hype, all the interest by retail. And in my opinion, the markets are going to keep on moving to the upside as long as the fundamentals are sticking the same, which in my opinion, they have to, because the government has no choice. They're not going to raise interest rates and make millions of businesses go out of business, or at least thousands and thousands, because they can't afford to operate their business because money is too hard to attain. Look at WeWork, look at Airbnb, man, it slipped out of my mind. Companies like this, Uber, they're barely profitable, if not profitable at all. So they're relying on that cheap money to sustain their business model. If it costs a lot more to borrow money, it's going to be very difficult, and it's going to be costing a lot of jobs, and the governments know that. They can't have that. So they're going to be continuing to print money because they can just kick the can down the road. So In short, we see an expansion phase. We just saw a break of a major level of confluence here at around 3,500. Now, if you are looking for a potential target here, size of the zone, we're looking at like $5,000 for the S&P 500, which sounds unbelievable, but it's happened before. A move from, let's say, March to August was 40%. So then if we're looking at examples using our bars pattern, let's not pick that one. Oh, maybe we shouldn't pick, we'll pick this one. I don't think we're going to be that bullish because we just had a strong push to the upside here. So let's take this impulsive push, consolidation, impulsive push, and tighten it up so it's a little bit easier and easier to relate. What do I mean by this? Tighten it up, make it smaller, 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 make it higher, 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 kind of like that. Make it a little bit smaller maybe. So that, in my opinion, could definitely be a possibility. We're going to see some volatility, definitely, that's the case, but in my opinion, we're just going to be moving to the upside here. Pretty unbelievable, but inflation is real. It's occurring right now. Inflation in assets is what we're seeing. There is tons of money printing. Let's even, actually we're not going to look at that right now. It's just a chart of the M2 money supply, but there is a ton of money being flooded into the market. It's really easy to attain money. There's lots of speculation, right? It makes sense that stocks and crypto and really all assets are doing well. Unless something changes, we're going to be seeing a continuation of risk on assets and speculation flood the markets, in my opinion. So hopefully this was a useful educational video or informative, entertaining, however, or whatever you're using this for. Hopefully you enjoyed it and it's some use to you. If you do find this useful, it would be very appreciative if you do give it a thumbs up and subscribe, so then we know that we should continue making videos like this. If you have any suggestions, would love to hear them out in the comment section below. Like I said, the Discord that we currently have is active, it is engaging, there's some really good conversations going on there, and we do post more frequently than the crypto market and global macro updates on our current YouTube channel. So hopefully you enjoyed it. Hopefully you are definitely profiting. I really hope so, because there's a lot of opportunities out there. Manage risk, obviously, but in a time where alts will absolutely fly and BTC is doing exceptionally well, might be not such a bad thing to take a little bit of risk just to have yourself exposed to some extremely lucrative opportunities. So hopefully you are staying safe and profiting, and until next time, have a good one, traders.